Hi everyone, I'm Ken from CryptoTradingKS. I thought I would do today's episode a little bit differently. I've put out a lot of content on Twitter, and this is just the content we look at each and every day. We can see overall that global markets are behaving like global markets do. They're going into the red and they're going into the green. The big issue facing the markets was the CPI release. And it actually came in hotter than anticipated. The CPI year on year was 6.4% versus the forecasted 6.2%. But the previous was 6.5%. It therefore came in lower than previous but hotter than forecasted. Please be aware the core retail sales and core PPI and PPI are coming out this week. We've seen the 2-year absolutely take off, but the target probability for the federal funds rate increase is still literally hovering around 25 basis points, and it's not really changed too much. In the last week, the probability of a 50 basis point increase in the federal funds rate has stayed at 9.2%. We would have expected, if the Fed or the dealers or the traders were looking at an increase in the federal funds rate, we would have absolutely thought that this percentage would have increased from 9.2%. It's just like literally being stuck there like super glue. Especially when you see things like the 2-year yield absolutely take off in a rocket. And when we contrast the 2-year, the 5-year, the 20-year, the 30-year, and the 10-year, we can see that they're all taking off at the present time. We've seen a bit of a change in trend in the yields, and that's actually brought the major indices and, of course, Bitcoin under pressure. The real question is, what has been happening with the CPI? It's been coming down, but there are components to the CPI that bear mentioning. One thing that we've noted, the cost of services has actually been climbing. And when we look at the CPI, you can see that there are different components: food, energy, core services, and other core. And as a group, they're actually moving down, but they're starting to flatten out. With supply chains easing up, we've seen core goods inflation actually falling, but core services are actually increasing. And why is this the case? It's the case because economic systems are reopening. When we look at the change in consumer prices on selective items, we can see the gas prices, petrol, have come down, energy has come down. Utility gas services, they've gone up. But airfares, oh my goodness, they were so overextended in terms of price. It's no wonder that they've actually started dropping as the world is reopening. It's that reopening that is causing a very strong job market. We can see that people are going out and they're buying more clothes. They're buying more luxuries such as jewelry and watches. Shelter is going up. Recreational services. Yeah, people want to get out there and party. They've been locked up for way too long. Sector performance. In the last trading session of the main markets, we saw IT come up and there was a lot of red across the other sectors. But it wasn't too much of a drop, just down 0.03%. Consumer defensive took a hit. Industrials, real estate, healthcare plans, and look at Tesla just going for it. The crypto market reacted quite negatively yesterday, with Gary Gensler doing Gary Gensler things and overreaching with his organization, his personal organization, the SEC. With the attack on Paxos and the stablecoin BUSD, Gary Gensler thinks that a stablecoin where you can't make a profit falls under the Howey test, where you must make a profit to actually fall within the confines of that test and be registered as a security. Gary, what are you doing? Oh, I know, he's wasting taxpayers' money, because when the SEC goes after different organizations, hey, guess what? You foot the bill. Paxos, the issuer of BUSD, also agrees that the Howey test just doesn't apply to something that doesn't go up in value. and therefore it categorically disagrees with the Securities Exchange Commission and will vigorously litigate if necessary. Germany is taking the lead from the US, thanks to Gary Gensler. With the German engineering and technology giant Siemens has become one of the first companies in Germany to issue a digital bond on a public blockchain worth 60 million euros with a maturity of 1 year. This is in accordance with Germany's Electronic Securities Act. Oh, it's a Securities Act. Maybe Gary could learn something from Germany. There's recently been a lot of talk about unidentified flying objects, and the US says that the 3 mysterious objects are likely private with no China link. But the spy balloon was in fact a spy balloon. Sam Bankman, still freed, has had the SEC and CFTC cases against him deferred after his criminal trial. With all that said, let's run the numbers. Bitcoin is currently up 2.85% to 22,230. Ethereum is up 4.65% to 1553. Masterclass students, in LV19, I talk about global markets, and this shaded area is the Fed recession band. Why are there 2 shadings? There's actually 2 indicators that I put together here. One tends to throw a faster signal, so I like having both in. If we're coming up to a recession or a recession has actually been recorded, we'll see it on this chart. One thing to point out, the major indices are doing really well. They've overcome levels of resistance. They've actually broken out of their downtrends. It doesn't mean that the markets can't come back, and you can see globally, most of the markets are exhibiting very similar signs. We're quite overextended at the current time. We may actually find that the markets retrace on higher yields and then the yields start to normalize and things get back on track. We need to keep a very close eye on the support levels across these major indices and see what actually starts to break support. Just keep that on your radar. I thought I'd also share this one. This chart is from LV16. It looks at very specific global indices, and you get a really good understanding that the world basically moves in alignment with the US markets. This is a very important understanding to have. We know that the yields are very overextended, and when they get overextended, they can retrace, so just be aware of this. If the yields start retracing, we would expect the markets to rally, and that's what we're looking forward to. One thing to keep in mind when we look at the 9 sell-offs and recoveries in the S&P 500 since 1966, we can see that the S&P 500 is actually overcome a level of resistance. It's actually also being supported by price. There's a bit of room to come down here and retest that lower support level. So overall, the markets are actually looking quite healthy. Looking at the main markets, in the past trading session, we can see the risk-on appetite through junk bonds. Hopefully it's finding a level of support here, but it's way too early to tell. And we can see that the VIX, the fear gauge of the market, has done a quite substantial retracement. One thing that we want to be aware of, the yields are very overextended at the moment, and bond prices are overextended to the negative side as well. We could see some really interesting developments occur over the next couple of days. It's absolutely critical to know where smart money will buy and where smart money will sell, because that's how you enter and exit the markets. And it depends on which band that you want to hold in and which band you want to sell in. But we did see a lot of wobbliness in the DXY as it actually sold off with the CPI report and then touched. It's very important to understand market structure. Market structure is where the smart money will actually lean in and support price. It will literally reject downward price momentum. And smart money sell levels are where the market makers step in and say, you're not going any higher, down you go. It's very important to understand these levels. And when we look at the DXY, look what happened here. When the CPI report came out, the DXY actually dipped into that smart money buy area and then literally ricocheted up to the smart money sell area. You can do very, very well by knowing these levels. And if you don't know them, it's really hard to figure out where things can reverse. You have a couple of ways of actually understanding where the support and resistance is actually inside the market. There's short-term support and resistance levels, and of course there's market structure support and resistance levels, and we call those objective dynamic market structure. It's always important to understand where the market structure is, and also what the trends actually mean. Often you'll get this violation of trends. It happens all the time, but we're still seeing the S&P 500 ETF Trust, the SPY, going up in price. This is very, very positive for the market. But if the SPY actually comes down, we would expect to find support around the 407.08 to the 407.45 level, and there's a lot more support below that as well. When the dollar went crazy with the CPI numbers coming out, we saw a tapping of different smart money buy and sell levels. What we're actually seeing when we look at gold is something very, very similar. Gold, which is currently trading at 1865, came up and tapped the smart money sell level between 1875.80 and 1880. And then what did it do? It absolutely plummeted down two smart money support levels, down into the 1851 to 1853 zone. And this is why it's so important to actually understand. You can trade these zones. It's very, very effective. To maintain positive price momentum, gold must get above this 1865.80 to 1868.70 smart money sell level because it's below it. You can see the sellers are pushing the price of gold down, but keep your eye on the DXY. The CTKS method gives you a lot of power in determining where price can fall to and where it can rebound to. It's absolutely like having money in the bank. And if you don't know the CTKS method, it's like looking at price action like this and saying something like, well, where is price going to fall to? Oh, well, it obviously must fall to a recent indicative price level. But that's not the case. That's like saying that this particular instrument has only been trading for a couple of days or a couple of months, and these instruments trade for literally, in some cases, decades and decades, if not half a century or more than a century. So you actually need to do what the institutions do and actually look at charts like this. You need to know where these solid market structural levels are. If you know those, you're well on the way to becoming a professional trader and investor. When you're in crypto, it's important to understand Bitcoin cannot escape the stock market's gravity, and the stock market looks reasonably healthy at this current point in time. There was a bit of wobbliness, definitely, with the DXY, and gold reflected that, but also Bitcoin and the major indices reflected as well. We've had core inflation and the inflation rate come out, and we saw it did cause volatility. Next are retail sales and building permits and the PPI. We noted yesterday that the shorts were piling into the market. They've pretty much gone flatline in the past 24 hours, and the longs are starting to come up. Based on this price action, you can see that the shorts are getting liquidated. That's causing the price to go up. Please note, and I do deep dives on this inside the masterclass in TG34, this shaded area is actually the weekend. One shading for Saturday and one for Sunday. And happy Valentine's Day, everyone. Everybody yesterday was feeling pretty confident that the markets would absolutely crater, that they would go to zero. Let's check out what actually happened. There were 82.53 million in total liquidations across 26,496 positions. And what we saw, total liquidations across the past 24 hours, 73% short. What about the past 12 hours? About 71% short. What about the past 4 hours? Ooh, it's getting more, 80% short. And what about the past hour? Even more, 87% short. It just goes to show you that inside the market, what is deemed as being a sure thing often becomes not a sure thing. And this is why you have to keep your eye on the fact that you look at the markets going against you first, going flat second, and going for you third. Certainty is never your friend in financial markets. If you're feeling very, very certain about something, the opposite is likely to occur. Bitcoin has come up 2.03% in the last 24 hours. And the greatest gainers in the top 100 are Singularity Net, RNDR, Immutable X, Rose, The Graph, Phantom, GMX, Mina, and Optimism. The greatest losers in the past 24 hours are Binary X, Maker, USDD, Leo, USDP, HT, GUSD, Casper, and USDT. Ooh, there's a lot of stable coins in there. Looking at the top 8, we can see Bitcoin's gravity. Now let's look at the alts and overlay Bitcoin's gravity, that blue line across the alts. Do we see that the alts are moving in directional alignment with Bitcoin? For example, when Bitcoin is coming up, what's ETH doing? Is it coming up? Yes, it definitely is. What about BNB? Is that coming up? Yes, it is, but not with the same strength. You can see very, very different patterns. If BNB was looking like ETH, BNB's price would be up here. Just bear that in mind. BNB is a little bit weak at the moment, especially with the SEC telling Paxos to stop giving BUSD to Binance. And that's actually raised some really interesting things. How has CZ responded to this? Basically, he said, we're exploring other stablecoins and non-USD based stablecoins. Good on you, Gary. You just weakened the US dollar. I'm sure that's what the president wanted. I've been saying for a little while now that it's really important to keep your eyes on the stablecoins. What actually happened was Circle, the deployers of USDC, the issuers, they said there's something dodgy with Binance's reserves. So they then very astutely went to Gary and said, hey Gary, investigate them because we want more market share or because we're concerned citizens. And then what happened? Of course, the news came out. And what's actually been occurring? We noticed that the DAI stablecoin actually took a big drop in value. Algorithmic stablecoins, you've got to be really careful of them. I think that what may actually happen, instead of a US denominated stablecoin, Binance may not go for an algorithmic stablecoin, but it might go for something like euros or even Australian dollars. Hint, hint, CZ. And we see, just kidding, what's actually happened is that the Tether market capitalization has gone through the roof because Tether recently reported its reserves through BDO, and BDO, a very reputable accounting firm, global accounting firm, said, yeah, Tether's okay. So the actions of Circle didn't actually go as planned at all for anyone. Just to explain a little bit about DAI as a stable coin, it's an Ethereum-based stable coin whose issuance and development is managed by the Maker protocol and the Maker DAO, decentralized autonomous organization. If we look at Maker's price momentum, it's recently retraced, but it's been actually going quite well over the past month. So if I change this to the past month, you can see Maker has been doing not too badly. But with the market capitalization of the DAI stablecoin just hemorrhaging, I would urge a little bit of caution. Just look into it a little bit more. The absolute standout in the top 8, and the top 8 is composed of 3 stablecoins, Tether, Circle, and Binance USD, and I think BUSD is destined to absolutely leave these ranks. Personally, I've converted my BUSD to Tether. Sorry, CZ. When we look at the next 8, just keep in mind Bitcoin's gravitational pull. Is it actually doing anything to these alts? When we look at Doge, it tracks very, very closely. Matic not so closely, but the directional movement is always there. Matic has been doing really, really well recently, and I pointed out in past episodes around these kind of times, these turbulent times when there's a bit of negative sentiment inside the crypto market, Matic and Tron are very likely to rock and roll, and that's what we've seen here right at the moment. Just keep your eye on Bitcoin's gravity, that blue line. You can see Solana just literally pinging it, Doge pinging it. And these go out of phase as well, so it's important not to get too caught up. What you actually want to do is to look for the change. Look for desynchronization events. That's what you actually want to look for. And then you want to seek to cross-compare different alts with each other and to see where the strength is and where the weaknesses are in different projects. That's what we do as professional traders. You can see the very, very different pattern exhibited in Doge and relative to Tron. Tron has been coming up, and we're not seeing that same kind of pattern in Doge or Sol or SHIB or Litecoin or AVAX or in fact DOT. And we're starting to see it in terms of Matic, but not the same as Tron. Tron around the dark times in the market, it's a shining light. Well done, Justin. But the one thing to bear in mind, Doge has a lot of underpinning support and it's literally at a market structural support level. So it's looking quite good for Doge, and Doge typically recovers before Bitcoin does. Oh, Ken, how could you say such a thing? You have to prove it. Absolutely, my friends. I love proving stuff. Let's have a look for a bit of a decrease. Well, this is pretty big decrease in Bitcoin. And what did Doge do? As Bitcoin was coming down, it started to flatline. It started to recover first. I've seen this many, many times in Doge. Please keep your eye on it. It's like when I said, keep your eye on Tron, keep your eye on Matic. These patterns tend to repeat themselves. They don't always play out with certainty, but they tend to. And look at this big spike in Doge. Of course, Doge is very news dependent, but the concept is it happens. It can give you some signals, and those signals you can apply. I've seen across the years it can be very advantageous to look at what Doge is doing. It doesn't matter if you invest or trade in Doge or not. Sometimes you must look at other projects because they can actually signal things happening inside the market. As a global family, we believe in positive excellence. This makes life worth living, and it's really important. One thing that I'd like to focus in on today, and I'll read the comments out tomorrow, why do you think outer peace is part of positive excellence? And why would it be here? Is it really that important? If it is, why is it important? I'm really looking forward to your comments. Have a great day ahead, and I look forward to catching up with you tomorrow. Bye for now.